Starting again, here we are at Fidelity's stock screener. A little bit of background. I know it might seem very basic as far as what I'm teaching here today, but there are people out there, including my mom, so hi mom, that need this help, and this is the reason why I'm creating this video. Actually, more for her, but for those folks out there that perhaps might still need that extra little, push or help or guidance, this video is for you. So we already went through security price as far as a way of looking at the stocks with the stock screener and Fidelity stock screener here today. Again, we'll talk about all these other preset research piece of advice and reports later, but let's look at now market capitalization. So we're going to talk about market capitalization now. And what is market capitalization? So it's the value of the company, or it's how much the whole world thinks that company is worth. Meaning, how much does this company, if they could sell it today, what price could they get from another company who might want to buy that? So let's click into market capitalization. So now it's hard to understand maybe what market capitalization might mean. But again, right now the price of the stock is currently at $5 a share, $200 a share, or $500,000 a share. But we have to basically multiply how much it is per share by how many shares outstanding, meaning how many pieces of the company are out there being sold. So if you want to look at maybe companies that are worth more, we click on Microcap, which is $200 billion companies or more. So you can see here in the list that exists, Apple is the most highest value, or rather it's the highest valued company out there at over $2.7 trillion, or around $2.7 trillion. And it is literally trading at $168, but because there's so many shares or pieces of the company out there, it is worth more than Amazon, which is trading at $3,297. So just because a stock is very expensive does not mean that the company in its entirety is worth more or less than another company. So Microsoft is the second most valued company out there at 2.24 trillion, and Amazon is at 1.6. So does that mean the company is truly worth that much? I would say no, but the market says it is. And that's why this is market capitalization. So right now, out in the world, we believe, or at least people are buying the stock, thinking that Apple is worth the most out of every single company that exists. Now, I don't like to buy companies personally that are worth a lot, because that means it's hard for them to grow. They would need to continue to grow in order for that 2.7 to get, higher, or the stock price to grow higher. That's why I don't like Apple or Microsoft or Amazon. Even though they grow a lot, they get a lot of publicity out there, it's just not my way of doing things. So a lot of times I like to look at the bottom end. But is the bottom end necessarily good either? Is that a good choice? Well, frankly, because it's at the bottom, that might mean that these stocks are not really good, because maybe they've been around for a long time and they just have not grown. So these companies are worth, 2 point whatever billion dollars, which is still a lot, but it is, maybe not necessarily growing as high or as fast. Or maybe they just don't sell products or services in an area that can grow as big as like Apple or Microsoft and or basically Amazon. But anyway, you can look at the size of the company. So Microcap's going to be the smaller companies, and you can look through this list and again click through to see more details. You can look at again the basic facts, which is really great, so you can kind of see what kind of company it is. Like this is a bank here for HTLF. This is a company that's worth $2 billion. The share price is $49. Their dividend is 2.1% or 2.17%. Again, you can look at performance and volatility, which again, performance means how much they're growing, perhaps, it means how good their stock has basically gone up or down. And 1 year annual return, that means how much did it return, or how much did the stock go up or down in 1 year. And literally beta means compared to the other stocks that exist. And you can click on valuation and growth, which these are, again, metrics about, is this the right price? Or, is this going to grow as a company? And then institutional ownership will be how much do other companies who invest in stocks own of this company? So this one is owned a lot by people outside the company. That means people inside the company don't own as much. Sometimes I like it when people inside the company own more, because then maybe they will work harder in order for the company to do better. And then this will talk about how much institutional or outside investors have increased, which is maybe a good indication, like, okay, we trust this company is going to grow, so there's more people wanting to buy it from outside. And then, again, analyst opinions. So these are people outside who study companies all the time, who, try to give them a score. Again, bullish means it should grow, and bearish means it will probably go down, or at least that's what they think. And then they'll have strong buy, which is the best rating, and 1 is usually good for at least their opinions. Buy is going to be 2. Some are going to say sell, like this, 4, which obviously they're saying do not buy this. And then there's neutral, which is in the middle. Hold is a little bit worse than neutral. Hold is in the middle, and basically then it gets to sell, as far as what kind of ratings that they have on the other end of buy. Okay, so that's basically it for market capitalization. You can just, evaluate it again by the size, and then you can click on these other different things in order to understand whether or not this company might be worth basically buying. All right, so hopefully that helps. Again, this is the second criteria we're going to evaluate with Fidelity's stock screener.